I've been in crypto long enough to see the same story play out over and over again. In 2017, I made money and I lost it all again, like probably you too. In 2023, I turned the same knowledge into 7 figures. And in this cycle, I see people still making the exact same mistakes as I made them years ago. They are chasing entries, calling tops, waiting for the 100x in alts, but they have zero exit plan. Most people get in pretty well, but never get out, and that's the real issue. And that's exactly how people walk away broke at the end of every bull run. This isn't a hype video. This is the exact exit framework I'm using for 2025 and 6 and onwards. How to walk away rich and not wrecked. If you've been watching my videos for a while, you know I'm not here to guess. I trade the data, not the dopamine. So today I'll show you how to actually exit this market without trying to time the top and without becoming someone else's exit liquidity. So why do most people lose in bull runs or in general after market pumped? And the biggest reason is because people are too emotionally invested into trading and they don't have a system. At least a small system could help them. And I'm going to teach you this in this video upcoming on the chart. But they have a zero clue on entries and exits, right? Entry is pretty easy. They get in by being FOMO'd in or hyped in, or sometimes even they get good entries, which is perfect. And then they have a 20, 30, 40, 50% push. But exiting is too hard for them because they fell in love with the virtual gains. You need to understand that if you don't realize a position, it's not a gain. Only once you have closed the position and the money is on your bank account, that's a profit. Anything else is just a state, right? It's somewhere. It's still liquid. It's not realized gain, right? It's unrealized gain. That's why you call it on every exchange. It says unrealized gain. If it's not realized, it's not your money yet. And the biggest issue is because, again, they fall in love with the potential of where the position could go. They want to hold longer and longer. They start to calculate, if I hold for another 2 weeks, another 10%, another 20%, I can buy this car, this house, this watch, whatever. And that's a complete wrong direction that you're going, and that's why people are getting wrecked over and over again in these bull runs. They write it all up, but they also write it all down again, and most of the times they end up in minus. So I'm going to give you a very small strategy on how you can use technical analysis to see where price is going. So in this example here, you can obviously see BTC, USD or USDT, and you can see very well how markets obviously basically always creates tops and bottoms, right? So for example, over here, we have a bottom, right? We have a bottom over here where we basically initiated the chart, and then we have highs, for example, here. We have a bottom again here, and we have a high again here, and then a correction which creates a bottom again here, and then a high again here, and so on. Always the same thing. Now, the biggest problem is that people, for example, enter somewhere over here, mostly somewhere over here, when there is a, let's say, social confirmation for going into BTC, right? Why? Because we made a new high over here. Market is pumping, people are starting to FOMO in, so most people enter somewhere over here, but they completely miss the exit over here because they truly believe it's going to continue and continue and continue and continue, or maybe they think, hey, it's just going to be a small pullback and then it's going to continue and continue. But that's not the case, and I'm going to give you an easy strategy that you can use right now on how to identify where market is going with a high probability. It's going to be a little bit technical, but guys, no fluff on this channel, just what really works. So the very first thing we want to do is we always want to identify the lows and the highs, okay? And very easy to understand that. Now we are on the weekly chart, so it's a very big chart. You can go into smaller time frames, and as you can see, we are using TradingView on the desktop app right now. Everyone can get TradingView for free. So the first thing we want to identify is the high and the lows and the initial low. And we start from the initial low, and the initial low obviously is here. And what we're going to do is we're going to mark out the trend-based Fibonacci extension, okay? Trend-based Fibonacci extension is pretty easy to use. You start at the bottom, wherever you want to start. Then you go to the very first high and you go to the lowest correction that you see in the chart, okay? For example, here. So that's the first game plan that we're going to follow. Now, obviously, we are doing this in the past. We need to do it right now for the chart, and you're going to see something crazy happening. So let's say, again, we use Fibonacci lowest point. We use the highest point, right? And then the lowest correction. Why am I using this high and not this high? Because after this one, we had a lower correction, right? So what I really want to do is I want to use A, or basically 0. So 0, A, B, and C. We're going to add Elliott waves to that in a second. And the Fibonacci settings that you want to put into are these ones. I'm just going to open it up for you. You can screenshot it and then just copy it. You want to have 0, you want to have 1, 1618, 2, and 1809. The rest you can turn off, okay? These Fibonacci's you want to have. Now, what you want to do again is you want to identify the lowest point, okay? And then you want to use here the ABC Elliott correction wave, ABC. Okay, you can find it here over in the tools. Once you go over here on patterns, you go on Elliott wave correction, and then for the Fibonacci, you go into the Fibonacci area over here, and you want to use the trend-based Fib extension. Okay, so what we want to do is we want to start at the lowest point with our with our 0, right? Lowest point, highest high, like the highest high we had before we had a big correction. And then we want to put C target, which is always here at the 1809, okay? And then what we want to do is we want to add a little quadrant for a zone. So we want to identify a specific zone, which is this one right here. And then what you want to do basically is delete this tool out again. You just want to make sure this is all adjusted and looks fine. And then you see something insanely interesting, okay? We are now talking about BTC USDT on a monthly chart. And you can see that we perfectly hit our C target, okay? And from C target, we started to correct lower, okay? So that means if we have a low, we have a high, and we have a lowest correction, we can very much predict where the price is going. And I'm going to give you a lot of examples, okay? This here is called the NXT system. It's the basic of the basic of the basic that I'm teaching you right now when it comes to the system. But it's a proven way on how to identify very well where price is going with a high probability, as you can see here in BTC. Because as soon as we have the low, we have the highest point, and we have the lowest correction. Why am I not doing this, for example, for you to understand? Why am I not going here and then here? I can definitely do that, and you can see it pretty much ends up in the same way, but this correction here is not the lowest. This one is the lowest, right? We want to have the lowest point, the highest point before the lowest point, okay? This is clearly the lowest point after these highs, right? And then you can see it gives us this area over here, which is the C target where price most likely is going, because price builds up in a three-way count, because as you can see here, we have the local low, the highest point, lowest correction, and then C target, which is where price is going, okay? And I'm going to show you a lot of examples for you to not think, oh, he's lucky, it works on this chart. It works basically all the time, okay? Now, there's one important thing, and that is for us to get confirmation if price has the probability to go to C target, and that's the activation of A, okay? So remember, this is point A, and point A forms a top, right? A all-time high, okay? So if you go back at the end of the day in the replay and we say we are sitting here right now, we are now in replay mode. So it's deleting this chart basically, right? It is very difficult to say, oh yeah, Bitcoin is sitting at 17,000. It's definitely going to go to 121,000. The interesting point for us is once price goes higher than A, that's an activation of the sequence and a confirmation that the probability just became way higher for us to go to C target, okay? So if I just click here on play, you see price is coming up. We have the local bottom. Price is building up, building up, building up, building up, right? And right now here, these are all internal sequences. So I could do the same thing here and zoom in, okay? And do the same thing over again and say, okay, we have a low point, we have a high point, we have the lowest correction, and then you have another sequence, which is basically this one over here, right? So if I go into it, you're gonna see something very interesting happening. Perfect, you see C target was hit, same thing here. We overcorrect. Let's give this a little bit more speed. Unfortunately not possible. And then here we have a big push. And now this is a very interesting zone because price for the first time broke the last all-time high, which is a activation of the sequence. That's what we call it. After the sequence is activated, the probability of where price is going or price going to C target is pretty high. And then if we continue to play this, you're gonna see how we're gonna end up in this very C target that we are in right now. Okay. So let's play this. And it offers us re-entries, okay? It offers us re-entries, and re-entries, we define them with the Fibonacci tool, okay? But that's maybe a little bit too much now and too much sauce for free, definitely, because you know, if you want to learn trading, we lead Europe's largest trading community and we teach the system. And we're going to use another example, another chart. So you can see here are re-entries. These are interesting re-entry zones. And you know already the rest of the story, right? We're going to hit C target And that's what we're doing right now. And we are reacting bearish out of it right now, which is exactly what charts should do. So that's an easy way on how to find your entries and your exits, right? You want to definitely combine market psychology where there's blood on the street, you want to buy. This is the blood on the street phase over here. That's when everyone says, oh, Bitcoin failed. It went down so much. It went down 50, 60% from the top to the bottom. It's 79%. It lost 80% of its value. That's when you want to get in. So you really want to get serious in this area over here, instead of like most people do it, buy over here and then just have less gains. Okay, so we want to get in when everyone says and no one speaks about Bitcoin anymore. This is especially this phase over here, and we want to get out here. That's basically the whole game plan. We always want to get out here on C target. Once we hit, okay, the quadrant, the quadrant in the beginning, that's where we want to get out. So again, if we do low, highest point, lowest point, the 1618 is where we want to get out. Now, is there a probability of price continuously going up? Yes, 100%, but you are out. You are out with from this point until this point 500%. Why continue to hold and have the opportunity of losing it all, right? That's definitely a wrong mindset. So let's go into another chart and do the same thing again. Let's take Solana, for example. We are again in the weekly, and let's speak about where Solana could go with a high probability and when are you starting to take an exit. And that's what this video is about, is how to identify exits, okay? We start at the lowest point. We go to the first highest point before the lowest point, and clearly this is the lowest point. Price went never below the 9.82 here, right? In this part here in the future, or basically this is the future, but in the recent past, right? There is no point where it went lower than this, okay? So we want to extend this, and then again, we get our C target. We're gonna quadrant it out. And then we take our Elliott wave. We start at the lowest point, highest high before the lowest point correction, which is this one over here, and we put it over here, C target. And that's, as you can see, this is our target right now for Solana, which is sitting at 425 US dollars, okay? Currently, we are still 109% away from that, okay? And since we activated the sequence, remember what I said, once price comes higher than A, which we clearly had over here, it tested this region, right? It closely came back to it, okay? And it did it here also. It bounced off a couple of times. So here you can see you have a lot of resistance coming in, right? In this area, there's a lot of liquidity where market is getting sold off all the time. But that's completely okay. Because if you still enter now into Solana, for example, right now, okay? Yes, we could go lower, but that's okay. Right now, you still have 109% possibility of gaining, which is crazy, but also you're gonna get out at a very good point after making 109%. So this is the basic strategy, basic for me as a professional trader, maybe very confusing for you, but you can rewatch this video, take it step by step, and if you really wanna find out the source on how to trade the system, we teach it since more than 10 years. You can get that, right? Let's take one more quick one for an example. Let's take, for example, more like an altcoin, something that I love to trade too, which is, for example, let's take SPX, okay? Same thing over here. SPX is a meme coin, has a very high liquidity, a lot of volume, okay? And same thing here. What we want to do is we want to identify, and we're going to start here, okay? We want to identify the lowest point. So the lowest point here is a little bit confusing because it's not the start. The lowest point is this one. Then we want to go to the lowest correction. As you can see, this is the lowest correction. Then we're going to go to the all-time high before this low correction, which is here, right? And then again, we have the same thing. Now, why am I not going here to the highest point and then to the correction here, which is actually what I should do, right? So I'm tricking you guys to see, because as you can see, here's the lowest point, but there is a lower point from the high, right? So this high has a low point, but then in the future there was a lower point. So that's why I need to adjust to the last highest point before the lowest point, okay? Which is this one over here. So what I'm gonna do is I'm gonna, again, same principle, mark out C target. I'm gonna take my Elliott wave tool. As you guys can see, there's a very high probability. We didn't have an activation yet, so you're very early, which is pretty good as an entry, okay? But if we should see C target, we have a 251%. You have a very good entry right now. You're still pretty low in the chart, okay? and a lot of potential to hit any gains. Now, you would say, yeah, but this never works. You just saw it in Bitcoin, which is the biggest cryptocurrency asset, and it works in every market. It works in Forex, in crypto, in altcoins, in meme coins. It works in indices. It works everywhere. Like, just to give you an example, let's take, for example, the Dixie dollar index. Same thing here. Lowest point, high, right? Here's the lowest correction point, C target. We are close to hit C target, okay? Coinbase. Same thing over here. You can see it. The blue sequence, lowest point, highest point, correction, price activation, re-entries, and then you have internal sequences. So very high probability for Coinbase to go to 652. Okay, let's take PayPal. Same thing. Low C target was hit, right? Overcorrected, came back for a re-entry. Same thing here. Let's take, for example, Platinum, right? Same thing. I'm in a trade in Platinum since a very long time. Currently up 70%. Low A correction. I entered perfectly in the correction phase over here, right? Sweet spot. From there, I'm up 70%. Price is going to see target, right? Insane. Works all the time. Let's take silver. Same thing, okay? Silver just on a bigger scale. Okay, low, highest point, lowest correction, C target. Look where we're going. And these are always going to be my exits, okay? Let's take XPD, right, which is Palladium. Same thing. We are hit C target just today, okay? Exact same example. Now taking profits, 40%. I entered a little bit late, which is okay. Still made 40%. Now I would start selling off my positions. XPT still has a lot of potential. We are very low, so I might only take 50% correction. But for you, because this video is all about how you are going to take exits, that's the easiest way. The big difference between Bitcoin, Ethereum, and everything else is that they have the most liquidity. So the more liquidity we have in the market, the better the system is going to work and the higher the probability of price actually going to see target, right? But now you got a good entry and exit strategy. When is the right time to exit altcoins? I would always say the right time in general is a mix of technical analysis, which I just showed you in the video, see target, but also fundamental level. The fundamental level is what people say about crypto right now. If crypto is completely hyped, overhyped, everyone speaks about it, everyone says, oh my God, it's going to go to the moon. On the Apple Store or Google Play Store, Coinbase and these crypto apps become place number 1 and 2 in downloads. That's the time when you want to look into like maybe getting out of crypto and taking some profits, even if we are not hitting C target yet. Okay, so it's a combination of fundamentals and a combination of technical analysis. The real euphoria you can track at the end of the day by being on Twitter, socials, Discord channels. You have to surround yourself a little bit in the crypto bubble or in the investing bubble to see what people are saying. And if people are overly bullish, everyone says buy, 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 buy. That's when you want to shift your sentiment to more sell, 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 sell. You definitely just want to do the direct opposite of what everyone else does. In 2025, we just had the biggest liquidation event, so it applies very well to see that everyone was bullish. Everyone was saying, oh, October is a bullish month, November is a bullish month, September is a bad month. Everyone started to stack buy orders, buy orders, buy orders, buy orders, and they all got liquidated. And it's gonna happen over and over again. I just recently made a post on Instagram story, so make sure to follow my Instagram. I post a lot about trading, investing, my positions, what I'm doing, investment tips and tricks, and also reels and content about it. And I've been doing a story and I've been saying that these liquidation events will happen over and over again because if the market makers see the orders, they can see where the liquidation is. Even I can see where the liquidation is. So if I go into a tool that is called Market Monkey, here you have a liquidation heat map, right? And since we are on the blockchain, everything is transparent and open, and I can see where the liquidations are sitting. And I can see there's very big liquidation at 126,000 for BTC and 135,000 for BTC. These are the two big liquidation areas. So if the market makers see, and even I see the liquidation areas, what do you think is going to happen if we have enough buy order? The market makers, the hedge funds, the big guys, they're going to move price down. So that's just how it goes. I truly believe that people should be prepared right now with buying orders. I started to buy a lot of cryptocurrencies. As you can see here, I bought Cake, HBAR, Casper, Link, Ondo, Solana, SPX, SUI, XLM, XMR, right? LTC, VeChain, right? BNB. Just recently I made 136% on BNB. Same example over here that we gave, right? You can see my entry was here. It hit C target 136%, just to again show you how strong this exit and entry strategy at the end of the day is. Obviously, my strategy for the future is exactly the same strategy I've just been telling you about. I've been using it in the last years. I try to enter as low as possible when there's blood on the street, When there's big liquidation events, when there's big sell-offs, that's when I get in. I do the contrarian because I'm a contrarian multi-asset trader, and I'm going to hold it until see target, and then I'm going to liquidate my positions, take the profits, and be happy. Even if it continues, it doesn't matter. There's always opportunities in the market. The truth is nobody ever loses money because they bought the wrong coin, right? Most of the times not. Most of you guys watching this video, you buy at a pretty good time, but you just don't know how to sell it. They lose everything because they don't have a plan when to sell. Now you have a plan. This market doesn't care how smart you are, and it only cares who is disciplined. And if you are disciplined of following the systems, then you're gonna make good profits. I learned that the hard way in 2017 because I didn't have a system. I didn't have an entry and an exit plan. In 2023, I walked away free. In 2025, I'm not here to gamble, I'm here to execute. And that's what exactly I'm doing. So before the hype takes over again, ask yourself, do you want to be the one calling the top or the one that is quietly cashing out while everyone else is getting liquidated, like we just saw recently? If you want real strategy, hit subscribe right now. Me and my team will show you how to build wealth while the rest of the market is chasing the noise and the FOMO. So I'll see you in the next one.